Welcome traders to this video on getting started in technical analysis. We're going to cover just a few things here that are very important, especially for those of you who are just getting started in reading charts. But there's going to be some stuff in here for those of you who've been reading charts for a while. And, I find that a lot of people have been doing technical analysis for a long time, but they've still just got a 9th degree white belt. So it's like, yeah, they've been learning a lot of stuff, but learning a lot of stuff incorrectly. Markets are different now than they were. So if you read classic technical analysis books, which I highly respect, the problem is they just don't work anymore. So I'll tell you why in just a few moments. So let's get started. I want to point out 3 different things. Number 1, structure. So that we read charts are structure. Number 2, money flow. And number 3, news. So let's start with price structure. So as we look at what we got here, for several different things, and again, this is going to be a quick overview. So one of the things we look at structure is price patterns, just individual price bars or just a couple of price bars together. So what we see here is a long wick on the bottom. That's called a wick or a shadow at the bottom, where you've got the real body up in here. That represents the open and the close, that colored area. And if you notice what happens, this is a daily chart, by the way. Oh, you can't see that. This is the S&P daily. So price went down, and during this day tested these levels down here and came back up and closed up here. So we broke, and that's part of structure 2 is multi-bar. So we came down here previously in previous days, went back up, and then this is called testing this level. It broke below the low and then came back up. And this kind of bar right here, I call a rejection of value bar. It means that the market participants, remember, the markets are made up of people who are buying and selling, bidding and asking. And that's what makes markets move, is people, human beings, their thoughts, their feelings, their fears, their greed, the FOMO, the FUD. And so they tested these levels below this low. A lot of people see that and they said, no, we don't think that can really maintain, and therefore it comes back up. So a price bar like this, with that long, again, we call that a wick or a shadow. These are candles. Candlesticks are from Japan, created by Japanese rice traders hundreds of years ago. By the way, that's also something to be aware of. The fact that these were created hundreds of years ago means that they were created before algos, quants, dark pools, high-frequency trading. And with the advent of these 4 modern technologies and others, markets don't move the same way that they used to anymore. So that's why if you go back and you read the classic technical analysis books, there's still some good stuff in there you can use, but there's a lot you cannot use. Not because the books aren't good or the authors weren't smart, they were geniuses, but because markets were different back then. Before we go on any further, I do have a special gift for everybody here, and I want to give you one of my free trade setups absolutely free. It's called the Rubber Band Trade, and I give it away to the general trading community, meaning you. And I make a lot of money with this Rubber Band Trade. It's one of my favorite trades. I still use it to this day, and I understand that you hear from a lot of traders. You don't know who to trust. I totally get that because I've been there too. So I decided the best way to wrestle with that is just to not wrestle with it at all. I just give you one of my favorite trades. Test it, try it out. Go to rubberbandtrade.com and get it for free and see if you make money with it. And there you go, no obligation. So rejection of value there led to a wide range green bar. Again, so the bottom of the real body, the colored area is the open. The top of the green area is the close. So after this little rejection of value down here, where people who attempted to sell down here got rejected, the masses, the majority of people said, no, we think the market's worth more than that. We think it's more than this low. A lot of people are looking at history, looking at that low, and they said, oh no, that's a deal or that's a steal, so we're going to buy off of that. We like to buy low, sell high, and that's really low, so we're going to buy low. And there they go. Off to the races they go. So that's part of structure 2. Wide range. There's 2 elements to candlesticks that are very important, and that is the range of the bar from the low to the high, and where it closes. The open is not as important. The close is the professional number. There's an old saying that the open is the amateur number, the close is the professional number. So this is a good example of that. And that's where, after all was said during that day, remember this is a daily chart, the market, after gossip, rumor, news, tweets, whatever happened, the market settled on that price, meaning all the market participants. Okay, then the next day was an indecisive day, neutral day. That's called a doji bar. But again, the main thing is just narrow range from high to low, and open and close were exactly the same. So indecision. When there's indecision on a day or on a bar, then we just maintain the bullish or bearishness from the previous day. Nothing has changed. And a lot of people tell you you need higher highs, higher lows. That's not necessarily true. In fact, again, in today's markets, it's different. The ideal scenario in today's markets is for the market to actually break through, or it appears, I call it a pierce a previous low, get this rejection of value pattern, and then go up. That's ideal. I would rather see that than a higher low. That's how markets move these days. And it could be people taking out stops, professionals taking out stops, which is beautiful. Because if the professionals are taking out stops, that means they're going long, and we want to trade with the smart money. Okay, same thing over here. If you look at this high, we've got a similar scenario where, we break above this high here. Okay, market goes above it, but notice, now, a lot of breakout traders will trade this. This is, again, where a lot of the old stuff doesn't work. Oh, we broke out. We got a breakout up here. Yeah, I don't trade breakouts. Don't like them. They don't work anymore. Well, not as well as they used to, that's for sure. And let me get a better color here. We'll just use this for now. So breakout trading, no, I wait for the breakout to fail. It comes back down, comes down below these lows. Okay, and then this is actually your buying opportunity there. That's how markets move today. And then it goes back up. So if you have been trading for a while and you've ever thought, God dang, just seems like whatever I do is wrong. It's like the market's always against me. There's a reason that your mind is thinking of that, because you're picking up on patterns. Your subconscious mind is picking up on the patterns of your trading and seeing that, gosh, it seems like everything I do is wrong. That's because it is, most likely. And trading today is opposite world. What used to work doesn't work anymore. The opposite works. And that's because, well, the bottom line rationale behind that is because the market's always trying to take your money. So once everybody starts trading the classic stuff, that's when the classic stuff stops working, whether it's head and shoulders, triangles, double tops, wedges, higher highs and higher lows, breakouts. Whatever everyone's doing is not going to work anymore. Professional money is going to trade against that pattern. So, got a lot more to teach you about that. This is just part one. By the way, if you like this video, please subscribe to the channel. And when you subscribe to the channel, you'll get automatic notifications when I come out with part 2 and 3 and 4. And who knows, maybe we'll even go to 5 on this same topic. And we'll put it all together for you in a nice, neat package. So subscribe right now to the Top Dog Trading YouTube channel.